member of the month, we have the, as I said before, one and only Chris Carsley. Chris Carsley with us, and I'm so excited to have him on with his wealth of knowledge, experience, background. So I'm not gonna go into too much detail. I'll let him tell you a little bit more. But Chris, I'm so glad you could join us today.
Well,
Thanks for coming
thanks,
on.
Erica. Thanks for having me. And yes, your one and only became quite a joke behind the scenes off LinkedIn. Because my response was, yeah, there's a lot of people probably out there that are happy there's only one of me, including me.
Oh,
I don't
including
know.
yourself,
If I
yeah.
had to, if I cloned myself and it came out like me, I'd have to get rid of it. It'd be way too dangerous.
Oh my
But
gosh.
so no, well, thanks for having me. Yeah, it's great. I love doing these things, and hopefully we can cover some interesting material for people who are watching.
Absolutely. And that's the thing, right? Like you've got such an amazing background, and you've talked to me a little bit about your fund and all the different things you have going on. So my goal is to share all the wonderful and amazing people that I know with all the other wonderful and amazing people that I know that happen to not know one another. So that's what this is about. Thanks for sharing. So I guess, we'll kind of get into a little bit of your background. I guess tell us, education, background, like what drove you to where you are now and any unique and valuable experiences you've had along the way.
Oh, so you want to start where my daughter likes to start, when fire was invented and dad got his career started. No, yeah, let's I guess we can start from the beginning and move forward, because it's far more entertaining in the beginning. No, I got into investing because one day I think I was about 12 years old, maybe 13, or on the way in between there, and picked up a Wall Street Journal. And if you've ever looked at an old Wall Street Journal and turned to the investment page, it's like a whole nother language if you
Yeah.
don't know how to read it. And so I had no idea. So of course I went to my parents, who were not big in investing, asked them. They looked at me like, how would I know what this means? I think that, they give me a lot of, I think this, and I was like, And so they passed me on to some other people and finally figured out what all that gibberish meant. It seemed quite interesting. I just kept on pursuing, and then found out that my dad had, like, I don't know, $1,400 saved up in some mutual fund. And I was like, well, let me do some research, figure out how we can, do this. So I would get off. This is back in the day when obviously parents didn't know where their kids were. There was no cell phones and didn't care where they
They had
were.
that commercial on TV.
Yeah,
Do
yeah,
you know
exactly.
where
Yeah.
your
I
kids
mean,
are?
yeah, my mom used to be say, it's like, if he gets kidnapped, they'll give him back. Um,
One
so
and
yeah,
only.
they won't want to hold on to him. But I'd get off the bus and I'd walk 2 or 3 blocks down to the Smith Barney office, where my account was at. And this is back in the day when ticker tape still came out and was hanging on the wall. And
Oh
they did
wow.
have a Quotron on the desk, and it was the monochrome green and black. And you could, if you knew the symbols, you could type them in. And I don't know how up to date pricing that was, but it's probably lagged by a few hours back then.
Hopefully
But
you got the same day pricing, right?
exactly. So I just started doing research. Was fascinated, didn't have anything else to do as I was waiting for parents to come pick me up and do a number of different things. It was me and a bunch of older gentlemen reading ticker tape. They thought it was quite hilarious. This little kid, trying to read the top of the ticker tape, which was at about 6 feet, which I was nowhere near there. And that's kind of where I got started. I sold the mutual fund and invested in a few stocks. And one of them, interestingly enough, and this is where you always wonder, if this didn't happen, where would I be in my career? I, there was a company called Contel, and it was, great revenues, all the usual things that people are looking for. But here's the one thing that really got me: is the stock symbol was CTC, which is also the initials of my name.
Wow.
So,
It's
Christopher
fate.
Thomas Carsley. And so that just had to be fate. About 3 months into buying the stock, I mean, the stock was doing quite well. It was paying its dividend, standard, telephone, stock, all about the dividends. And then GE decides to buy it, and it goes up considerably, and I sell it. And I think on that one trade, I made like $300-400. And I thought, wait a second, at this time, you understand, I grew up on farms. I was driving tractors, getting up at 4:30 in the morning, digging post holes. So at a very young age, a lot of heavy labor
Yeah.
on a farm. And I was like, wow, I didn't dig a hole, rake anything, pull weeds, or anything whatsoever. And I made this money.
There's the
Okay,
light bulb.
I could get used to this. And that's kind of what started it. I was the weird kid in college that knew exactly what he was going to go do. So everything was all directed towards my major, whereas a lot of my friends were still trying to figure out, well, what am I going to do with my life? And then, that obviously led into my, first career. Was lucky enough to go out to New York and pound the pavement in '94 and got a couple small, interns sitting on some desks for a month or two, and then finally got an offer back in Seattle of all places. And then started as a junior portfolio manager and worked my way up to, managing sort of the second largest account for, key asset management. And then my specialty was always math and derivatives, and I was always playing with, options, which was like voodoo back in that day. Like
Yeah.
only bad, dangerous people play with options back in the '90s. Um, and but I was able to do what now people I joke it's like I'm doing covered call structures and things like that. I mean, now I joke because it's like grandma's doing that in her IRA now, so it's not really that special anymore. But that's did that for a number of different years. I got very lucky, ran into someone who worked for a hedge fund back in Greenwich, and they were opening up a desk in Seattle of all places. And that sort of led to my next life, is sort of learning how hedge funds work, arbitrage trades, securities finance.
Wow.
I mean,
Okay.
just that,
And that was
as I
all while you were in New York.
no, I was back in Seattle.
Oh, you went back to Seattle. Okay, I'm
Yeah, I
sorry.
had to go back to Seattle to where I got the asset management job, managing high net worth and, small family offices and trust accounts and things like that. And then, what's the chance? A major well-known hedge fund happens to be opening up one of their trading groups is opening up a desk in Seattle. And, I got invited to join there. And that was
That's
just,
awesome.
as I tell people, it got pulled behind the curtain. And then that just sort of kept me in the alternative space where, I left there and went on to work for a fund of fund. And then, post that, I started doing a lot of angel investing, and then, ran a small seed angel fund, and, and then just kind of spiraled on to where I am today, running a private debt fund, in real estate. So there you
That's
go.
really interesting. Like, and I, I think you and I have talked about this a little bit. Like, my background is traditional finance as well, kind of moving out of that space. But I think it's a really unique advantage when you can look through multiple lenses and be able to see things, right? And have that experience, be like, well, because here's the thing, if we're honest, not what's advertised versus what really happens are two different things, right? Like when you drive down the road and you see the fast food sign and it shows that burger, it never really looks like that in real life.
Of course not.
And fortunately in life, like that kind of happens too. So being able to have that perspective, do you feel like that's helped at all with your current
Oh,
place and
yeah. I mean, it's helped through many different aspects. You got to think, how does a hedge fund guy get invited into the room to sit and review companies for Microsoft? I mean, why would they want someone like that? And that differentiation that you're talking about is, and don't get me wrong, there's a lot of people who specialized in things and they're really, really good at that one thing. That
right.
was just not where my career took me. It was this, all of a sudden I'm being exposed to all these different ideas, constantly, and kind of moving, through the alts world in multiple different facets. And a few people that were part of the early accelerators and things like that were going on in Seattle were like, wait, this guy really looks at things differently. So you
Mhm.
can put a bunch of venture capitalists in the room and you might get all the same point of view. He's going to attack this from an entirely different, angle. And even I joked when I was in that room, I was like, oh, well, I'm a hedge fund guy pretending to be a venture capitalist today. Um, and
That's such an
it,
advantage though.
but it allowed me to really see just a ton of different things that others just didn't think about. And I also would ask the not so nice questions, because I'm pretty much all about like, well, where's your money coming from? There's a lot of people in venture trying to save the world, and for right or wrong, I say, hey, that's great, but it's tough to save the world when you don't make any money.
Yeah. No, I mean that's
And
totally
so
true, right? Like you
it's
can have a good heart or big pocketbook. Not that you can't have both, but sometimes it takes both to make moves.
oh yeah, no, I you got to show where the money's coming from. I mean,
Yeah.
in a startup, which I've, still advise a couple different startups, and that's always everything. The two things I bring to the meetings is usually is where's the money coming from, and two, don't do that or you'll get a personalized orange jumpsuit with your own number on it. There's a lot of people in tech that are coming in to, fintech and trying to do things in the investment world, and they don't realize those aren't the really nice soft padded bumpers you have when you're doing the kiddo bowling. The bumpers that the regulators put into the securities world have spikes and blades and nasty things on them that
Man, FINRA and SEC
if
do
you
not
hit
mess
them, you're in
around.
trouble. Yeah, you're in
Yeah.
trouble.
And there's no
um,
warning. There's no like, oh, don't do it again.
oh yeah, no, I mean, there's so many people who are like, oh, we can get in here, we can gamify investing. I go, that's a really bad idea.
Yeah.
That's
Oh my gosh.
the regulators don't like investing and the management of other people's money to be a game.
Yeah.
I like that
Gamified is not the right. Yeah.
So
Choose your words,
yeah.
man. Choose your words.
Yeah. So yeah.
Well, that's kind of a good segue though, kind of like moving into your investment focus now. So I guess I know you've got your fund and you've got Kirkland Capital. So I guess
Yep.
tell us, what are you guys doing now and how has it changed from when you originally got into the alternative investing space?
Oh wow, that's a tough question because I mean your knowledge base always grows the longer you stay in one particular field. So I guess the one thing is you always think you know a lot, and then you do something and you're like, wow, I didn't know half as much as I thought I did. And then that just sort of compounds on itself, and you
What's
keep
the
on learning
quote?
constantly.
The more I learn, the more I realize what I don't know. Or
Yeah,
there's a quote.
that is one of my quotes that I actually use. It is the more you learn, the more you realize you don't know.
Yes.
That's actually applies to a lot of my hobbies. Martial arts is one that I constantly, I still teach
Forgot you
martial
do
arts.
martial arts. I forgot about that.
And I say that to people all the time of, well,
Strong
it's
brain
almost,
and strong body. That's awesome,
yeah,
man.
yeah, always, martial arts people think it's just a physical thing, and it gets to the point where the physicality needs to be combined with your mental acuity, or it's not going to go well for you. I mean, when I mean not well, I mean
You
in
can't
martial
just
arts, I
Hulk
mean,
smash through your martial arts.
no, I mean, trust me, I mean, that works sometimes if you can catch someone off guard. And anyone who tells you size doesn't matter in fighting, they've never fought a house, which I have. And yeah, size is important. Those guys get a glancing blow on you, you're going to have a bad day.
I'll take your
Yeah.
word for it.
So yeah, no, it's not something unless you really want to. But back to like the investment attitude, it's exactly that. Is there's too much to know. And that's one of the things I just did a short webinar on, I tell everybody, hey, build your network. It takes time, and keep building over time. And so I did another short webinar of like, well, how do I do that? And sort of shared with people all the different angles and things to think about that I'm thinking about, because, 20 years ago, I didn't think about network at all.
Yeah.
I mean, I was like, what is it? Who cares? I just go do my trades and I make money, and that's great. And why do I need to know anybody? Then all of a sudden you realized, when you step out of being sort of a guy who sits at a desk cranking away on a particular trade, you actually need people. You can't know everything. You can't do everything. There's not enough time in the day, and you need those resources because the knowledge base is just too vast.
Absolutely.
And it's like, I always tell people, I go, well, I'm going to do what I do, and I totally believe I could go do almost anything if I put my effort into it, but I just don't have enough time to do that. And so
your time's better spent doing what you're already good at.
exactly. I mean, and it's like, okay, this is the opportunity set that I can bring to the table, and this is what I'm going to build and do. And even for my own personal investing, people are like, oh, well, do you use funds? I go, of course I do. I know some very, very intelligent people that do things that I'm just not going to do. But I'm willing to pay them a fee to go do that, even though I could probably figure it out, but that I need another lifetime to do that.
Yeah.
I mean,
The time, the effort, the
that.
energy that it takes to
Exactly.
do that, just pay the person who's already good at it.
Exactly.
Yeah.
I mean, I
Oh,
always
I'm
have all
smelling
these
what you're
people
stepping
that are
in,
trying
dude.
to,
You don't.
well, what is it? This year and the end of last year, being in private debt, I always laugh because I've been around, you know, doing this since all before the dot-com era. And I've heard it so many different times over the years. And this is always about when it's about to fall apart, when everyone thinks they can do everything themselves better than in the professions. That's always a time where it's about to fall apart. And
You know what?
so,
That's a really good scale to think about because, and I'll, even on the infinite banking side, when we work with a lot of real estate investors, business owners, but on the real estate investor side, even when we were talking to people in 2018, 2019, and we're having that conversation. And as you know, infinite banking is not like, oh, it's a great rate of return. Obviously, it's infinite banking, not infinite investing. But when I'm talking to people and I'm asking them and they're talking about, oh yeah, I have this and I've got this going on and that going on with their real estate. One of my first questions I always ask is, how long have you been doing this?
yeah.
And it was, oh, since 2015, 2006. Now, don't get me wrong, they've learned a lot in those few years, but they hadn't experienced a full cycle or some sort of
Yeah, just
economic
haven't.
reset.
Yeah, and honestly, yeah, it was kind of a shock in a lot of ways to have interest rates go up so much, but that wasn't anything like. I mean, that was like a slow, like someone, punching you slowly instead of just this quick jolt and a massive gap, and you realize and you wake up because you just hit the ground.
Yeah, it's like death by a thousand cuts. It's
Well,
just
that was
little
kind of
after
like
little
where, I
after
mean,
little.
a lot of people saw '08 coming, um, but they weren't exactly sure what it really was. You knew there was a problem, and a lot of people were preparing. I know that for a fact because on our SEC lending desk, all of a sudden I had people calling in like 500 million billion-dollar lines. Hey, we need to wrap this up. And that was in the beginning. That was sort of mid '07.
Yeah,
I mean, so
interesting.
people knew things were not right.
Yeah,
And so, but when it actually happened, it was actually quite quick. I mean,
yeah.
all of a sudden you had Lehman fail. I was on the phone with Morgan Stanley's like, oh yeah, we've been told that we could be next unless there's some kind of bailout. And then it was like, oh my God, this could be absolutely catastrophic beyond
Wow.
people's imagine. And it was actually happening quite quick. I mean,
But it
so
had
I
been leading
mean,
up for an extended period of time.
correct. I mean, but
Yeah.
to the outsider who wasn't privy to the
Mm-hmm.
bigger moving game, you had no idea what was coming. And so
Of
it's
course
like
not.
when you see interest rates going up in this last little problem, I mean, you kind of had some time to think about it. And there was there was no lack of news out there of saying, well, interest rates are definitely going up. And so, like to your point, there was a lot of people who've been doing things since 15, 16, 17. It's like, okay, well, I hope you've been really super conservative. And
Right.
unfortunately, a lot of them were not. Now I laugh because there's lots of problems in the smaller players, but the bigger guys who are supposed to know better and they're on the forefront of everything, well, they're the ones really struggling right now. I mean, they're the ones that have all the gateway city office space. And if we're sticking to the real estate issues, I mean, it's like everyone's like, oh, I should go work with the big guys. And I know they're super smart because I used to work with all these guys, but let's just say they got caught too. I
Yeah, it's
mean,
all like you said, it's all about their like the investment philosophy, right? Like what is it that you're trying to accomplish within your, whatever fund or investment that you're putting your money into?
yeah,
What would
I
you
mean,
say like with Kirkland? I know you guys have a couple of things. What would you say is y'all's philosophy? Like what are you guys doing within your fund? What are you offering to people?
our core angle is about it's a private debt fund, so I mean the core angle that we are trying to provide yield, an equity like return with debt level risk profiles. And I really label ourselves as, I know everyone wants to bucket things in real estate or this, I always say we're really much more of a fixed income alternative.
Okay.
And the real estate aspect is really what allows your principal preservation. I mean, because every single loan, obviously, in a mortgage is backed by, a physical building. And, our specialty is we're doing microbalance loans in commercial real estate. So a lot of multifamily, a lot of mixed use, some, light industrial, retail. We don't do any office, obviously, just avoiding that space. I mean, there's enough deal flow and opportunities in our lending space. We don't really need to do anything in office. I mean, everything will wax and wane. I mean, I'm sure it'll be back in one form or another. It's
Oh, absolutely.
just not right now.
Right.
You know, I always tell people, it's like, I've got a few friends that own tech companies here in Seattle, and I'm like, well, if you wanted to go from renting your own office to owning your own office, this might not be a bad time to think about that.
Yeah.
You know, if you wanted to buy an office space, and, you know, and so I said, because, you know, it's not going to last forever. So yeah, I mean, that's what we focus on. And we're just trying to build a relatively, you know, consistent yield, that is, you know, above what you can get from traditional markets. And at the same time, really offering that principal preservation. I mean, I tell people, this fund is not about making people rich. It's about the solidarity and, you know, the fortifying and building over time of people's wealth as a fixed income alternative in their portfolio. You know, I've got a few webinars and things that I've done out there where I talk about, you know, the impact of, you know, 2022, where you saw traditional fixed income, you know, really hiccup, as big as you've ever seen in history, at least in my career. And everyone else I was talking to, everyone's like, I've never seen anything quite like that bad. Now equities were still doing quite well and continue surprisingly to do well. See how that plays out. I'm not going to make any market predictions, but you still can't believe where the S&P and all the
It makes no
technology
sense.
companies are going.
It makes zero sense based on everything. So yeah.
Remember the market's about investors' expectations, and
Right.
a lot of those expectations are not based in numbers. They're based in emotions and feelings.
It's emotions. Yes. Yes.
So I mean, I always tell people, when people tell me it makes no sense, I'm like, yeah, let's talk about what actually creates the market.
Sense, right?
Yeah, well, I got that. Well, that's a whole nother conversation. We don't have time for that.
That's a real campfire conversation.
That's a yeah.
But it is. I mean, it's one of those things where when you're you know, when you're looking at what's going on, it's hard to make those predictions, especially right now. Like I try to tell people at this point, I don't know what the future holds. Like everyone keeps talking about the Fed rates. Are they going to lower? You know, who knows what's going to happen? But
I've always, I mean, this is not really a prediction of me. I have to keep saying this because I've been saying it for years. There's no reason why there would be a Fed ease this year unless it's a political move. It's just
that's
not
the one thing that
it's just not in the numbers.
There is this is an election year, so I'm like,
well, and that might create something to where, oh, hey, someone wants to create a small ease in rates, and some political party wants to take credit for it. Okay, sure. I mean, that's a possibility, but I think your move, if it does happen, it'll be a lot smaller than anyone really needs. I mean, yeah. I haven't met a venture capitalist or an equity real estate person or any else on the equity side that's not, you know, doing their rain dance of praying for, you know, somebody to lower the rates so that they can crawl out of whatever hole they fell into over the last couple of years. But I mean, in private debt, you know, it's where, you know, even that situation, I tell people, it's like, you don't, yeah, we're definitely capturing the rise and the ability to charge higher rates. But anytime you have a move like this, there's two sides to a coin. If you're benefiting, there's a risk that you're taking somewhere. And I've always said, you know, that risk has been in valuations. And that's where sticking to what you do and understanding the space that you're in and understanding the risk you're taking, and then saying, wait, what do we have to adjust so that we can help mitigate that risk? I mean, you can't eliminate risk. If you're making a return, I mean, I'd love to be putting up double-digit returns with no risk, but that, I think somebody would find my trade and take it away from me. You know, we're doing the best we can, where it's like, okay, hey, if we're sticking to that model. So, I mean, in our fund, we only do one thing. We only originate direct mortgages to microbalance commercial real estate. And I mean, we had to come up with microbalance. I should probably define that for people who are listening to this, because we came out the gate 4 years ago with the word small, and then we realized, wow, small in real estate can mean a fairly large loan, like $25 million loan could be small.
Yeah, that's all relative, right?
And it's all relative. So we had to come up with, you know, microbalance, because, you know, our loan size is, you know, I think that, you know, we got a couple that are 250,000, and the highest we go is 1.2 million. So we are really operating in a very niche, you know, fragmented space that is, you know, it's underserved from capital. I mean, that's, you know, you've met and talked to Brock, and, you know, Brock's the one that had that existing network in the background in underwriting, and, in 2019, he brought me this idea and said, do you think we have something here? Do you think people would care? And I was laughing out, man, people have cared about yield since 2015. They've been trying to fix this, like, hey, 100% equity portfolio and harvesting equity for a while, because, everyone who's been around for a while knows that trade can't last. Now, of course, it lasted a lot longer than people thought.
Yeah.
But, here we are.
Well,
We're
and
in
that's one
this
thing
mode.
too, like, and I was talking about this in like 2018, 19, even prior to 20. My concern was we were waiting for, we were, like you said, it lasted way longer than we expected it to. My concern with that was the longer you pull back on that rubber band, when it finally does snap, the more that it's going to hurt. And it just, I mean, I almost had like this, and even through 2020, like we saw a little bit of a pullback, but it wasn't to the degree that we all thought it would be. And so
No, it
it
really, I mean,
and so now I'm like, you're going to suffer the consequences. We all are going to, like, economically, we're going to suffer the consequences, but how long it took to get to that point, and it was slow. Like you said, it was not like this. It has been slow and slow and slow. It's been, like I said, a death by 1,000 cuts as opposed to like a quick, no, it was like a long
yeah.
pullback and then came down the hammer.
And even that hammer has been pretty light. I mean, it's like,
We'll see what happens this year.
being an ex hedge. Oh yeah, this year could be, we're not done with this year, so we'll see what the next
No.
6 months brings.
Yeah.
But there's a lot of economic stresses, that's for sure.
Yeah.
But I mean, being an ex hedge fund guy, I'm always sort of praying for chaos and destruction, because that's where
All right,
trades
you
come
heard it from
from.
here, guys. It's Chris.
But
He's been one doing the
I
rain
mean,
dance.
it's one of those. It's like, I don't think we've seen it. I mean, in certain areas, in certain books, in certain little microcosms, yeah, there's been
Right.
massive damage, but not on a whole, not
No, you're
across
absolutely
multiple
right.
sectors.
I
I
agree.
mean, it really, there's a lot of people still living pretty high.
Yep. I
So
agree. We have not seen it on a widespread scale. It's been very, very pocketed, very almost like divisive as far as how we've seen the impacts go. But well, and I'm glad you brought something up, and I wanna come back to it because you mentioned this. So obviously, being in a private debt fund, you guys are offering, a fixed income alternative. So I guess it's fair to say, like, you would say that it's almost been quote unquote beneficial with these rising interest rates. Have you guys been able
oh yeah,
to perform better through that?
the way we, I mean, two sides to every coin. Yes, we've been, we run a pass through model, so we don't run a flat, like, I'm going to pay you 9 or 10% or whatever, and I take everything else.
Okay, so it's a
As
pass
rates,
through.
as rates grow, and we are doing higher and higher, gross coupons to our borrowers, that benefit passes on to the investors, and we don't run an incentive fee also. So I mean, that it really is passing through. We have a management fee and fund expenses and everything else that we, collect. Now, with that said, though, especially in this year, you've seen a lot of people, and this is, across most funds, where you've seen, more forbearances, more
Mm-hmm.
extensions, more, foreclosure activity. And so that's the other side of the coin, which, hey, yeah, we're charging, mid-teens, but you take a few loans off the plate because you're not collecting interest yet and you're solving a foreclosure. Well, that obviously dampens the return. So
Yeah, that's
really,
fair.
really what you've seen, and we continue to be in this mode of where, it's 10 to 12% net. I mean, that's the range that we sort of picked day one we started this, and that's still the range we're
That's
in.
fantastic.
Even though you've seen rates go up, well, you're just dealing with more problems. Now, that's the one thing I always say is, like, default doesn't mean loss. Even foreclosure doesn't mean loss. It does, yeah, there's more legal fees and a number of other things, but we're first lien full recourse on everything. So if there's something that goes wrong with the property, we always have, a personal claim that we can, bring against our borrowers to, try and shore up of, as much of that money, or even, try to capture accrued and, unrecognized, interest and late
Yeah.
fees, things like that. So, I mean, definitely this is a year of a lot more work. A lot more work.
You're having to work for those double digits, those 12s and
Yeah,
14s.
it's a lot more work. But it's still, it's still performing exactly as, we had planned and in the range that, we're targeting. So
Yeah. Well, so what would you say? Like you said, there's two sides to the coin. So when interest rates, and back in, 2019, even in 2020, like we saw in 2021, we saw super low interest rates. So
Hmm.
on that side of the coin, if we were to, look down the pipeline and people are looking at, possible investment opportunities. If you're looking down the pipeline, right now we're in a high interest rate environment, or relatively. Later on down the line, when we're in a low interest rate environment, what would you guys say? Like, how do you navigate those waters, and how do you continue to perform at that same 10 to 12% rate?
Yeah, no, I mean, the cycle of when money gets cheap, equity is king. It was that way for 10 years. I
Yeah,
laughed because it took a while for everyone to realize what fixed income and private debt was. I mean, I had the conversation with a lot of people because for so long, people had never seen the other side of that cycle of
right.
what do we invest in when money's really expensive? Well, not equity. That's the places. I mean, it's pretty easy to walk through the math and you're going to get hit. Now there's still opportunities. And I led people, said, it's not like you're going to make a zero return or you're going to necessarily lose money. You just have an expectation of lower return.
There you
Don't
go.
think
Yeah.
you're going to get the same returns as money gets more expensive. It's a cost line in the equation. But for us particular, now this is really interesting. Um, in private debt, depending on how correlated you are to various sectors and what I call the volatility of money, how much money flows in and out of your sector, will have an effect on this. But, we were lending money at 10 and a half to 12 when cash was free.
Wow.
And now we're lending at, 13 to 15, but cash is 5. And everyone's like, well, wait, why didn't you just move in lockstep? Well, I'm not going to go into that here. There's a lot of supply and demand factors that go into that, but
Of
you
course.
also have the ability of like, well, hey, I want to target better borrowers, things like that. So you get to be more choosy. There's no lack of people wanting money, and that doesn't actually change. What changes is, well, the shifts you make in your own risk profile of what you're going to invest in.
Yeah,
And
you're
so
underwriting what you're
we're,
willing
we're choosing to be
to.
on the less risky side, knowing that I'm not targeting outside of that 10 to 12. So
Yeah.
if I can actually be in the 10 to 12 and take less risk, in my view, that's actually even better for my investors.
Yeah.
And so that's the kind of way we've looked at it. Now, there was an interesting paper, and I wrote it up in my last month's newsletter, where I described a little bit about we're actually kind of excited in a certain way for rates to kind of come down because
Okay.
our rates aren't going to fall as fast as, traditional, public rates.
Right, because you have
So
outstanding
the
loans, so they're
so
going to
the
be
net so
continue
the
to hold.
net spread for my investors right now, let's say, it's 5 and we're making an 11. Great, I get 6. So if it drops to 3 and I'm still making an 11, well, the net spread for my investors just went to 8.
Yeah.
And so that's actually one of the things that I've been actually watching pretty carefully.
Interesting.
And we think that's actually going to happen. And I know some other people who've been in private debt for 20 plus years, and they've said this is kind of happened before historically. And they're like, so what actually happens is the spread to the investor over the risk-free rate actually increases sometimes, especially if you're in a non-correlated area. So that is my best guess of what's going to happen for us. So I don't think we're going to necessarily put up lower returns or somehow magically come up with some higher return, but still within our range. But the net spread over the risk-free rate, we're hoping actually widens.
That makes
And that's
sense.
our guess. So
Okay.
that's
No, that's something that's not intuitive, right? Like I wouldn't have
it's not
originally.
intuitive
It's
because
not
people
intuitive at
think,
all.
oh, well, people are like, well, how come you're not raising your rates 500 basis points? And I'm like, well, it doesn't really work that way.
No, that makes
You
total sense.
could, but you're going to take extra risk to do that. And
Yeah.
just on the other side, if it drops 200 basis points, well, it's not like I'm going to wake up tomorrow and, oh, well, all my rates go down 200 basis points. It doesn't
No.
happen like that.
Yeah. It's a
It
slow process.
because banks will eventually come back to the water and they'll feel it's safe and everything's great in one form or another.
Hmm.
But that doesn't happen overnight either.
Right.
And so it all takes years to kind
Yeah.
of, these waves are not really high and sharp. They're very long and gradual. So
Yeah.
it's, and
But I
so,
think that's so much more of that's something digestible for investors to know, right? And if it's explained, and you explained it very well, thank you. When you explain it like that, and they can kind of see, hey, here's what's going on, here's what we're doing, here's why. I mean, boom,
yeah.
boom, boom. That's it. It's something to digest. So, So it sounds like you're like you said, you're doing those micro balance lows, minimum 250, on the high side 2.1,
1.2, pretty
1.2,
small.
excuse me. My dyslexia kicked in.
No, no.
So I guess let me ask you this. So for if someone were to call you, and I'm gonna look at this from two lenses. If there was an investor who was gonna
Mhm.
call you, who do you think is your target person? Who would be who would benefit the most from calling you in Kirkland Capital
So
as being an investor?
who would benefit the most? I'm actually going to quote someone else. I had a luncheon with a very intelligent lady who's now running an investment shop. And she goes, well, there's almost no one who wouldn't want what you're doing. And I was like, well, you're correct. I mean, who doesn't want to have an equity like return with that level of risk with a built-in principal preservation? Here's the question, or here's the statement is like, well, do they want it what I'm doing? Because I'm not the only one providing that product. There are other people out
Okay.
there. And so from her words, it's like, well, everyone wants that. It's just in what form do you want it in? Do you want it in some diversified where you're going to invest across multiple different private funds doing something
Okay.
of that nature? You really like me and what I'm doing, great. Or nope, I found somebody else, and and these guys are great. I mean, it's there's a lot of ways to skin this cat. We chose the real estate angle. I mean,
Hmm.
I got friends in venture that lots of different business and accounts receivable lending and factoring. I've got a lot of friends that do all that, and all of it has a place. It's just, we chose real estate for two reasons. One, after doing my homework, I was like, wow, this has a lot of downside protection built into it. And two,
Hmm.
well, it's also where Brock had an existing network of loan brokers, and he had done underwriting specific to this, pool. So, I mean, he had that network and that background in there, and it was just a matter of me, putting together the investment and building the fund and, marching forward, with, the products that he was able to create and in sort of this evergreen fund.
Nice.
So
Okay. Do you guys have and I didn't ask this, within the fund, are there any depreciation or tax write-offs that are available?
not in true private debt. There's a
Okay.
lot of people that do mixed funds where they got some private debt, pref equity, and then equity plays and everything else. And
Yeah. I was thinking with debt, I was like, I don't know if that
nope.
fits in there or not. So I figured I'd
No,
ask.
I mean, debt, I always say, I tell people with equity, it's like, listen, you can, it's a longer haul, longer lockup, greater internal volatility and risk, but you do have the possibility of higher returns. And,
Yeah.
there is a tax benefit to that. Now, I will say that in debt, there's not, but, our fund does have a sub-REIT built into it.
Okay.
So we actually created a REIT structure at the beginning of this year. So this is the first year of its existence. It also helps that all my largest investors are actually using taxable dollars, so they're all very, very happy that
Yeah.
I'm bringing the best tax efficiency I can bring through the REIT structure.
Through
So
the REIT structure. So that's available within the fund as well now.
yeah, everyone participates, whether you come in
Oh,
with
okay.
qualified money or not. So, I mean, yeah, there's no immediate benefit to the REIT structure for, qualified money, come in with your self-directed IRA or something of that nature. Now, we don't use leverage. I can't find someone who will provide leverage in a manner that adds value to my investors. So,
Well, I think that's really valuable for self-directed IRA investors, though, because I just did a
exactly.
webinar. In fact, I need to connect you with Karin Hall, who I just did a webinar with on alternative investing strategies. And one of the big things that people who have self-directed IRAs, if they're wanting to avoid UBIT, you need to find investments. So I've got to get you
Yes.
connected with
Yeah,
Karin.
yeah. No, that
Okay.
you hit on the key there is, a REIT blocks
Look
that.
at that. Okay, so perfect. So I'll get you connected with Karin. She is a beast. She actually is the founder and owner of UDirect Self-Directed IRA.
Nice.
So anyway, I'll get you connected with her.
Love to talk to her.
What's the typical hold time? One, minimum investment, and two, hold time within the fund.
Yeah. For a lot of people in a variety of different investment groups, we've been bringing in people, at 50,000.
Okay.
I mean, it's very important. One thing I've learned in running in a lot of different funds is I want people to come into the fund at a level that makes sense for them.
Oh,
Because
absolutely.
if you're stressed out and you're having a bad day, that eventually is going to bleed into me being stressed
They're gonna
out
be
and having a
texting
bad
you
day
and
because you're
calling
texting
you.
and calling me. So I want it to be sized correctly. And so I obviously I'm not your financial advisor, but I do tend to ask some questions of like, well, hey, how does this fit into, what you're trying to do?
Yep,
And
you're being
I
responsible.
always like to understand, because I have had a few people like, hey, I just had this sale of like $2 million, and well, how much else do you have? No, this is pretty much it. And I'd like to put it all in your fund. I'm like, that's a horrible idea.
Backpedal, man, backpedal.
Yeah,
Yeah.
don't do that.
Mm-mm.
And the hold period, most of what we do is a 12-month paper. We do a couple loans that we've done in 18 months, but we ask for a
Wow.
1-year lock. And because most of our portfolio is 12 months, so we're just really trying to do the best we can and manage that asset and liabilities. My liability is the investor's money, and the asset I'm holding is that mortgage. So I want to, give myself time. We've already had 7 loans roll off this year. I mean, and that's 1 from a sale and like 6 from, credit unions, commercial, or community banks taking them out. So
Okay.
as much as there's a lot of different hardship going on, there's a lot of just business as usual. Things are
Yeah,
still moving forward. Banks and
absolutely.
community banks are lending. It's not the end of the world. I mean, so I mean, we've had pretty good liquidity. Like we had one guy, he's like, hey, I got a unique investment. I'd like to have 100,000 out. So he had a partial redemption. And I mean, he literally talked to me Friday of last week. And I said, you know what? We just had a loan, basically come off. I've got the cash. Um, we always reconcile with our fund admin, and that takes a couple weeks. And I said, listen, let me check with the fund admin. Let me look over the books. And, if I have the ability to make it happen, no lawyer really likes you writing this into your docs of like best efforts,
Right.
but
Yeah, no.
I will
They don't want that on
always
paper.
I will always try to do best efforts if people need money and they've got something going on, and I've got the
But 12 to
capability to
18
get it
month
back to
hold
you.
time is significantly shorter than what
Well,
you're
they're all bridge
seeing.
loans. I mean, they're all bridge loans. So
Yeah,
it's, I don't,
that makes total sense.
we've been able to capture as interest rates go up. We've been able to capture those rising interest rates quite effectively. And like I said, we're not really worried about if interest rates come back down because we're not going back to free cash. This is not going to happen. I mean, there's a part of me that would be like, wow, that would be really cool, but it's not going to happen.
I don't,
I
yeah,
mean,
definitely not in the short term. I don't, not anytime soon.
no,
I want to come back. My other question was if there
yeah.
is, so I asked about who would be somebody coming to you as an investor for a target audience. If, and I don't know if this is an appropriate question, would you have a target audience for somebody who's looking for private debt
Want to make
for
sure I
their, like
understand.
for
I
their
want to make sure you're
deal, or like if somebody
Oh,
wanted to
you
say, hey, will you give me money?
someone who's looking for us to lend to them.
Yeah.
Yeah, no. If you are looking at the purchase or you already own a commercial property, obviously, like I said earlier, we're not doing anything in office.
Not office.
We would, we'll probably throw you terms you're going to say no to anyways, if you're in office, and unless you're really good with very, very low LTVs. But if you're, like I said, if you're looking to purchase a building or you're looking to, refi, we don't do construction, raw
Okay.
land, and even though there needs to be some light rehab, because obviously, there's a value add component if you already own the building. We have limitations, like we can't have you come in and great, I want to borrow money against this existing building, then I'm gonna knock the whole thing down to the studs.
Yeah,
That's
obviously.
just
Yeah,
not
no.
that's not a trade that we're looking for, because then that takes on a risk profile much more like construction, and we're just not, that's not what we
You're
focus on.
not
But yeah,
underwriting for that. Yeah.
yeah, and like I said, you also it I always laugh. I said if you needed, I could probably get you $20 million easier than I could get you $1 million. And that's why we're in this niche, is to really be there and provide a capital option for people who need to borrow smaller amounts.
That's awesome.
And
Is there
so
any particular geographical location that you prefer or don't like on either of the spectrum?
we don't really, most of our loans are sourced through, loan brokers.
Okay.
So anyone listening to this, if you're a loan broker and you run into these types of loans, I'm sure our underwriting team would love to chat with you or get you in the system.
I do have a couple of loan broker clients. So
Yeah, no,
whenever
I
I
mean,
do this out, attention loan brokers.
Yeah, no, we'd love to, because a lot of people see these trades and we hear this all the time. Wow, I see these all the time, and I usually just push them off the end of my desk because I just don't know anybody who does this.
Yeah. Or
And
even my I have some multifamily or commercial real estate brokers, right? So
yeah,
if they're looking to sell this deal and they don't know how to finance it, then they can call you guys. So
correct. Yeah,
yeah.
it's like, well, hey, I need financing so someone can step in and, hey, they need 12-month bridge to get the purchase done, and they think they can get to a stabilized level within, that 12 months, which really I always tell people you're dealing with banks today, so you need to be able to, like, 8 to 9 months in reality. You got to get to a stabilized, because it's going to take
Yeah,
your
make
bank,
your
it's going to take
projection
your bank a
6 months
while.
so it will
Yeah,
happen in 9
yeah,
or even
yeah.
12. Yeah.
It's going to take your bank a while to, get the documents put together. But if that's something you're looking at doing, that is we love that optionality. I mean,
Awesome.
that's our trade. So
Cool. Awesome. Thank you. That helps so we can know like, how to promote that. So like I said, we got personal, then we got into the meat potato. That is so helpful. Thank you. I know you and I have talked about that, but I like going into the details of it. So that helps me as well. I
yeah,
didn't even think about connecting you with Karen Hall. Especially, and then, anybody else that's doing self-directed IRA. Like I said, I just did a panel with her, so she's on the front of my mind. But yeah, that's a super
yeah,
unique investment opportunity.
that's been an explosive area.
Yeah.
I really had no idea there's that many providers out there until all of a sudden in the last 3 or 4 years, there's really been an explosion of investors taking control and taking the reins of their investing and saying, hey, um, this set plan of mutual funds is not really meeting what I want. I can
Yeah.
actually, do some stuff on a self-directed basis and really get into some interesting things that are offsets to maybe other pieces of their portfolio. It's been very advantageous for a number of investors. And, I work with we work with a ton of custodians. I mean, we don't choose them. Where most of our investors show up with them in hand, like I'm
Yeah.
already at this place. I know there's a lot of custodians that kind of like, hey, can you send our information to all your investors? And I'm like, we
That
list
is
you on our
good.
website, but we don't really, I mean, we don't really market one over the other. We're
Yeah.
just like, hey,
I'm the same way with our investments. I have so many people that are like, "Oh, will you?" I'm like, "Listen, I'm trying to open up the windows so everybody can see, and that's where it's at." Like,
yeah, I mean, I can give references to, well, okay, there's some that have been really, really good from a customer service standpoint where we've run into, a special situation and they jumped on it. And,
yeah, there
and,
you go.
I can mention those things, but it's like, we don't have any arrangements with any custodians or anything else. So it's kind of like, well, there you go. I mean,
Yeah.
but we're also on the big guys. We're on Schwab and Fidelity. We were on TD Ameritrade, but that all became Schwab.
Yeah.
But and I always tell, well, if you're at those places, and that's actually where we accessed a lot of, we make it administratively easy for a few of our RIA, investors. It's like, well, you
Oh, I didn't even
custody
think
it.
about
You
RIAs either.
you you
Okay.
custody at Schwab already. Well, great. We're on their platform. The money doesn't actually need to leave their system. It actually stays in their account. They don't have any money leaving.
Okay.
That's what they're always worried about is, it's, hey, it's all about AUM. I get it. I used to
Oh
manage
yeah.
money. I know how it works. And you need to have optionality for these people to realize, hey, I can actually, keep it all within my custodial platform for my investors. It shows up on their statement in my
Yep.
system. And that's what we've been able to do for a few RIAs,
We're
one
seeing a
at
lot more of
Fidelity.
the traditional, even so the firm that I worked for when I left, they were only able to offer like the traditional stocks, bonds, mutual funds. But over the last few years, we've seen a huge swing in the traditional space, going more into alternative investing. So
Yeah.
there's a ton, and even the firm that I used to partner with, we still have a great relationship, and I send some traditional people their way, but they actually just became an RIA to be able to offer that because I think people are starting to realize. Here's the thing: there's no such thing, I say this all the time. There's no good or bad tool. It's just what are you trying to accomplish? Don't cut a piece of wood in
Right.
half with a hammer. And that doesn't mean that stocks are bad. There's nothing bad. It's just what are you trying to accomplish? And for so long, people put so much effort and belief in the stock market, but it was all weighted in this one area. All the eggs were in
Yeah.
that one basket. And that's not the end all be all to your financial picture. That's not going to build your entire wealth, portfolio in this one area. So anyway, um, That's
Well,
another.
I always, even 25 years ago, I always tell people it's like, listen, you build a hub of what you want exposure to, and then you have spokes around it to where you're taking various, risk plays or offering something that gives diversification to your portfolio that doesn't come with traditional assets. I mean,
I like that.
there's
I
there's
like
a
that
lot of
analogy
things
of
you
the
can do.
spokes.
It's like, build the core of what you want, and maybe that's traditional stocks and bonds. Maybe that's your core. That's great. I mean, that's actually a lot of the people I worked with. And then it's like, well, wait, what else do you want exposure to?
Yeah.
And I always tell people I'm not probably the model picture for your standard investor because I've been in alts for so long. I have very little traditional assets. It's probably about 25%, and I'm about 75% alts.
Yeah. I
So
think most
hedge.
people who have left the traditional space would agree with you. I
I'm not saying
mean,
that's right or wrong. I'm just saying that's just because of my background and my
yep,
understanding of my network. That's just where
I'm
I
with you.
ended up. And it
Yep.
actually, I mean, one part of me is very happy. The other part of like, well, man, I really wish I had more S&P 500 because the thing just keeps on going up. I mean,
It's impenetrable.
yeah,
I can't even say that word. Oh my gosh.
yeah,
Anyway, so
it's a juggernaut.
impenetrable. My stutter, my
We'll see if
speech
AI
impediment.
can keep pushing it further. Really, how
Yeah,
much more value can AI bring? We'll see.
we'll see. All right, so we'll wrap up here. So I know, thank you for sharing all that,
Yeah.
on the investment business side. So, um, I would say to wrap up, can you give us maybe, two or three books and or podcasts that you really felt like have benefited you? And then also, is there anything in particular, um, any belief, behavior, habit, or experience that you've had within the last 5 years that you felt had the most positive impact on your life and kind of changed your perspective of things?
Oh, yeah. We'll start early. I watch a lot of different podcasts more for like education. So I don't think that'd be terribly entertaining because it's like, well, if I don't know something, I use that as a source to go quickly educate myself on, some random subject that someone asked me about and I don't really know. Um, Many people call me. I'm definitely the person you want on your team for, the bar, what do they call it? Trivia. Yeah, you want me on your
Oh,
trivia team. Yeah.
yeah.
Had a mind blank there. I run into things I don't know, and I'm like a moth to flame, where it's like, and so I'll
Let's
find
go
that. So,
figure that out.
but yeah, I got to go figure that out because I'm not going to become an expert in it, but I should probably know something, seeing
Yeah.
as I knew nothing. But from a book standpoint, Brock put me onto a great book of, especially if you're a small entrepreneur or running a fund, or you're scratching your eyes out of how you're going to stop working, you know, 26 hours in a 24-hour day. Um, it's a book called Who Not How, the
Oh,
Who
I
Not
need to
How.
read that one.
And it's a great book. I read it once and then I go back and reference different pieces, and Brock and I use it a lot as we restructure our thinking. I've
Yeah.
always been a how. I'm the tip of the spear, and I need to do this, and how am I going to get that done? And that's a lot of people,
Yeah.
especially in the startup world. And
I'm guilty of that myself.
yeah, I mean, well, a lot of people are. So that's been a great book. And then it's an older book, but I just ran into it recently. It's Persuasion. Um, and I'm having a mind blank of it's.
How to persuade people and make friends? Was it the Carnegie
Yeah,
book?
no, it's here, I'll pull it down here. I'm having multiple mind blanks all of a sudden. Um, it's Persuasion by Robert Caladini. So PRE suasion. So it's persuasion. And so
Oh,
what it talks about is a lot of biases and the effects of biases that people can take advantage of to sell you things or to get you thinking things that you know cloud your clarity of judgment.
yeah.
And so it's a really interesting book of he walks through his career of being a sales expert and the things that they did and the things that he ran into and the studies that he did all about what do you do before you even start to sell. So it's a pre-suasion is the name of the book. So
Interesting. Okay.
yeah, so those are two great books. And I guess your last question is
Unique experiences, beliefs, anything that has impacted you in a way positively that made you kind of change your view or perspective on
I don't
anything.
know if it was a one impact, but a life of dealing with unique stressful situations that most people are not, and I hope you don't get into these on a regular basis unless you're training like I am. But in martial arts, you deal with a great deal of stress. Depending on what level you're at, that stress can be fairly mild or it can be fairly intense, depending on what you're trying to achieve. If you're going like me, when I was much, much younger, I did some tournament fighting. And so you had people really trying to hurt you. And there's a certain level of stress in realizing you got to stay calm, even in
Yeah,
the most
like
stressful
I'm in physical
situations.
danger right now.
Yeah, physical danger creates a very interesting reaction in a lot of people.
Mm-hmm.
Which I mean, I have a saying that I told my daughter. If I'm standing there and I'm assessing a situation, we're probably not in danger. If you see me running, don't ask why. Run.
Oh, absolutely.
I have already assessed that this is bad
We
and
gotta
we got to get out of here.
Yeah.
So don't bother asking why, because I don't. The joke in martial arts is I'm not a long distance runner. I was born with mild asthma and things like that, so I don't tend to run from problems. I tend to square up on them. And so, but back to the main point of just being able to face a variety of different stresses and really maintain calm. A lot of people this is very classic. I mean, everyone's had this happen. They come to you and they say, "Oh, do you want the good news or the bad news first?" And I'm always like, always the bad news. I mean,
Yeah.
because what I generally find is what people view as bad news is really not that bad. It's all manageable. It's a matter of just keeping a clear head and solid thought and maintaining a calm. You might be ready to go, in whatever situation, but it's a matter of really keeping attached to your mental acuity of what's happening and say, because I always tell people you can't solve your problem, you can't defend yourself if you're panicking.
Yeah. You need to remove your emotion from the, remove your
And I
emotion from the logic of the situation
and
is your thought
even
process.
in martial arts, I tell people I'll put my foot on the white line against them and I'll be like, okay, stop. Go take a deep breath, relax your shoulders because you've already lost.
Mm.
All I have to do is look at you and you've lost. Let's go get in the right mode because I can tell right now you're super tense and it's not going to go the way you think. It's going to go horrible.
Yeah.
And so that's the same thing in work. It's like, okay, you get that initial blow, take a deep breath, relax. I do a lot of breathing exercises, so I tell people all the time, if you feel super panicked, stop whatever you're doing and just focus on your breath. Just breathe.
Absolutely.
Just breathe. You know, nothing's the end of the world except the end of the world.
Yeah.
Everything else is somehow solvable.
Yep. I love that.
And so that's what I've sort of built over many, many years. Just bad things are going to happen. There's always challenges. I literally believe life is just a series of challenges until you're just out of challenges, and we all know what that day is.
And the last challenge is death, and
Yeah,
that's the one that
well,
you can't win. So
that's not much of a challenge. That's
yeah.
you can't win that one.
Nope.
But everything else, and out of some of those challenges, if you can solve them and be successful, good things can happen. And it's just that realization that some of them you're going to fail, and you try to learn what you can from that and apply it to the next challenge, because the next challenge is probably coming sooner than you realize.
But that's not the truth. I feel like that happens, especially as you get older. All the challenges seem to get freaking closer. I just got this done. Oh, I feel like God looks down on me sometimes. He's like, I just cleaned up this mess. I'm going to deal with another one. I'm like, help me. Anyway.
Yeah, and work is stressing you out while your knee's giving out. Yeah,
Right.
all
Oh my
that
God. So what is and I'll put all this in the email and the posts and all of that good stuff. What is the best way for people to get in contact with you? Phone, email, website?
Yeah, certainly you can go to the website. That's kirklandcapitalgroup.com. You'll get all our information. You'll be able to access. I mean, if you don't want to talk to me, you can talk to Brock, whatever. I mean, obviously I'm on LinkedIn. There are not too many Chris Carsleys on LinkedIn, and there's even fewer Chris Carsleys that are CFA, CAIs. So not tough to find. I connect and talk to a lot of people through LinkedIn. So if there's something you want to talk about, there's questions, a lot of ways for you guys to reach out, and if you're interested in the fund, it's something you'd like to look into. Like I said, you can go to the website or you can reach out to me. We can always have an initial conversation, or I can hook you up on the investor library. Whatever works for you, whatever's easiest
Awesome.
for you.
And obviously you and I are connected on LinkedIn. So I'll put the website and a link to the website and a link to your LinkedIn profile. I'll put all of that in the email, as well as the social media postings. So everybody can blow up
Yeah.
your inbox, right?
Oh, well, that's part of the game, right? You gotta
And
build awareness.
oh yeah. And in the meantime, I'm gonna reach out to Karn too. And I have
Yeah.
another buddy that actually is a manager of an RIA. So hopefully,
I
man, get some people a
Yeah, I
great, I mean,
look forward to, one thing we didn't really talk about is I spend a lot of time doing educational work. So it's like if anyone has questions or things that I've run into, or they're looking to network with someone,
oh,
um,
okay.
I back in 2004, I started up the Seattle Alternative Investment Association, and the people who run that are doing a great job. Still, amazing events. And then I co-founded 5 years ago now the Pacific Northwest chapter for the CAIA. So always trying to work
That's awesome. You know what? And I
on the
remember you
networking
talking about that.
education. Yeah, so it's if people want, I mean, I even had people in Australia, hey, can you try and connect me to the local CAIA chapter? And was able to make that happen. So I mean, there's chapters all over the place if you're looking for further network, further resources for education. I always tell people, and it really doesn't matter, oh, but I'm not in the industry. It doesn't matter. I mean, those
Doesn't hurt to get
organizations
more
are,
educated on this
you're
stuff.
going to be sitting in a room of people who do this for a living.
Yeah.
And you can go and learn and meet some of those people, listen to some of the things that they are listening to and how they're thinking about putting things together for their clients.
Yeah.
And maybe there's a gem you can walk away with that you can use in your own portfolio. So yeah, if there's interest in that as well,
I'm
don't
so glad you
hesitate to
brought that
reach
up. You're
out.
right. We didn't get to spend a lot of time on that. But if you'll share those links with me, I'd like to include that as well.
Sure. Yeah, yeah.
Send it, because that's the thing, like, we always I know it's kind of cliche, but your network is your net worth. And so getting people connected and letting them know all the resources that are out there. The more we educate,
Yeah.
the more we provide those information and resources, the more opportunities people have. So I would really, really, really appreciate that. So
Yeah,
we'll
of course.
we'll wrap up. Thank you so, so much, Chris. This was really great info. Like I said, I already knew about your fund and we had talked about it. But this was so much more detail. And it kind of I like that we got into, like you said, two sides of the coin, right? And here's the thing, like, I think you kind of talked about this. There's so many people I've talked to that are like, oh, it's great. The market's great. Everything's booming. Like, it's so easy to make money when the market's through the roof and money is free. But
Yep.
when you're able to manage through and get through more economically compressed times, I mean, that's really what you're going to see make the biggest impact on investors and on yourself and your business. I mean, that's
Oh,
just
and,
huge.
and trust me, we launched in January of 2020. So we all know
Yeah.
what happened in March. That was a lot of fun.
Man, what a
Yeah.
trial by fire.
Well, yeah,
Golly.
your anchor investor calls and is like, "Hey, I'm not going to be able to anchor you." And I said, "I had a feeling that was the conversation you were calling."
Mm-hmm.
Now, I mean, with that said, Brock and I were already ready to go. I had already sold a number of different things, so we actually we bootstrapped this basically. I felt like I was
Okay.
back in a startup. I wasn't in a fund. I was in a startup, and all of a sudden now I'm bootstrapping this with my own money, and friends and family weren't doing much either. So it was literally day one was Brock and mine's money. And we just started doing loans with our own money because I told Brock, I said, listen, in a startup, you got to go from idea to real or no one's joining. You can't
Yeah.
pitch an idea, not when things are tough. And we got a little lucky because COVID was a little bit of a did get bounce. And,
Mm-hmm.
by May, June, some people were already coming back into the water. And then,
That's true.
we started seeing some outside investors,
But
but
you guys
that
had
was,
the
yeah.
ability to at least get through that front part, which is the hardest, right? Like getting started doing it and all that. And what you're saying actually reminds me of, I'm reading a book right now called 9-Figure Mindset.
Hmm.
I will have to remember who it's by, but he basically talks about the same thing: bootstrapping, getting things started from the ground up, all with your own money. If you haven't read that book, I think you would really like it.
Yeah.
Just
No, send me the link on that one. Yeah.
I will. But it was I'm getting it pulled up right now. But anyway, it's great to just kind of say Brandon Dawson.
Brandon
Um,
Nelson. Okay.
and he partners now. He does some other stuff with some pretty big people on the coaching side. But anyway, no, that's fantastic. Like you said, you and Brock, and both of you guys, I think it's so funny because y'all are both so analytical and so intelligent. Brock's a very smart guy and does a great job diving into everything. So y'all are both so similar, but you're just different enough that your partnership like works and you'll create that synergy. So y'all
Well,
bring such a unique feature
there was a
to the
very
space.
interesting, interview we had very early. I mean, that's what actually really made this work, and it continues to make it work. Was we have some similarities, but we have a fair amount of differences in background and specialties that we
Yeah.
bring to make this work. And I don't get quote for this, but I laughed because the person brought it up. She goes, well, you're kind of like that, the Super Friends, those Wonder Twins. And I go, oh my God, the fact that I actually know what you're talking about. Yes, the Wonder Twin,
The Wonder
Wonder
Twins.
Twins activate. Yeah. But it was really kind of an interesting view. It's like, well, I couldn't do it without Brock, and Brock couldn't do it without with me, but bringing the two backgrounds together is what allowed this to be created. So
Yeah.
we've
One
actually,
plus one equals three, right? Like it's
yeah,
just so.
worked
There's
out.
another good book called Rocket Fuel by Gino Wickman that is really powerful too. So anyway, this is great. Thank you so much, Chris, for coming on and
No,
sharing all of that and
it was great.
giving us so
Thanks.
much
Thanks for having
insight.
me. Yeah.
Absolutely. We will